Hello, here we are, back again. We are just taking a review of what has happened in the market over this week, as well as what we had anticipated and spoken about over the weekend. I just wanted to look at what we avoided and what we could have avoided. But however, let's start at the macro level. Let's look at what the central banks have made as the decision. For example, the Fed's FMOC sat on the 29th of January and decided not to alter the interest rate, and they were happy with the interest rates sitting at the 4.25% and 4.5 in that range. And they were taking a cautious approach, right? And what was the impact of that decision to the market? The decision led to immediate market reaction with Bitcoin prices dropping below 100,000 US dollars. Due to the perceived hawkish stance and not cutting rates further, this was the result of the reaction to the market, below $100,000. This reflects a broader market sentiment shift towards risk aversion impacting crypto valuations. However, subsequent news of a temporary halt on tariffs saw Bitcoin prices rebound, highlighting the crypto market sensitivity to broader economic policies. The ECB, on the 30th of January, they decided to cut their interest rate by 25 basis points, bringing the deposits rate to 2.75%, indicating a move towards a more accommodative monetary policy. And the impact of this to crypto is that this rate cut was anticipated and reflected positive in the crypto market, as lower rates often lead to increased liquidity and risk-taking behavior. An expectation of more liquidity in the market began, and potentially that benefited cryptocurrencies, although this was somewhat overshadowed by the global economic uncertainties like the US tariffs. The BOJ, on the 24th of January, hiked the interest rates by a further 25 basis point, putting it up to 0.5%, marking a continuation of the policy of normalization which started last year. And the impact on that on crypto was the rate hike in Japan had a mixed impact. While it might generally suggest a strengthening yen, which could make crypto less attractive for Japanese investors in USD terms, the crypto market in Japan had been relatively stable due to supportive regulation. However, global reactions to BOJ's policies might influence crypto policies indirectly through current valuation dynamics. And we had expected that there was going to be a rate hike, and we had priced it in, unlike what happened last year. The People's Bank of China, no specific rate decision was noted in 2025 from any available sources. So the interest rates still are maintained at the low rates with the intention to stimulate growth while focusing on the digital yen. And really, China's overreaching policy against private cryptocurrencies continues to create a cautious environment. While no new rate decisions were announced, the constant push for the ECNY might lead investors to shift from private cryptos, potentially affecting market sentiment. However, this impact is more long-term and less about immediate market movements. BOJ. Well, the BOJ has just made an announcement now before I went to recording. They've eased the rate, and it seems as if there is a discord, though, in terms of what the outlook of the market is. We are yet to study that decision, and therefore I'll provide that decision and its impact in the next recordings. So in summary, really, if you look at market volatility, the crypto market in January 2025 showed significant volatility directly linked to central bank decisions. The Fed's decision to hold interest rates steady among economic uncertainties led to bearish trends in the crypto prices, whereas the ECB's rate cut suggested potential for increased crypto investment due to higher liquidity. Only problem from the ECB, the policy statement that was made by its president, Christine Lagarde, she still seems to be not embracive of crypto and Bitcoin in her last statement that she has made, which is a polar opposite of what is happening in the new administration in the United States. The central bank policies influence investor sentiments towards cryptocurrencies. A dovish policy like the ECB's rate cut tends to increase the risk appetite. Unfortunately, the statements goes the opposite direction. while a hawkish or cautious approach like the Fed's rates hold might lead to investors to pull back from riskier assets. Decisions from one central bank can have ripple effect, especially in a globally interconnected financial systems where cryptocurrency strength, inflation, expectation, and liquidity are all interlinked factors that affect markets, such as the crypto markets and other markets. So sources like the Fed's official releases, the ECB statements, and the analysis of financial institutions like Kayakta Bank Research or US Bank or ING, I think they provide comprehensive view of the use of these policy decisions and their implications into the market. So in conclusion, January 2025, the central bank's decision illustrates how monetary policy directly influences the crypto market, with each decision providing insights into the potential market directions, investor behavior, and overall economic sentiments. So let's look now at what happened in the course of the past 3 days this week. The total crypto market cap declined. Currently, it's sitting at around $3.14 trillion, which represents a 5.81% decrease from last week. A 24-hour trading volume has also seen a 0.49% decrease over the past day, indicating a reduced trading activity. And the key influences, as we had spoken over the weekend, it's the tariffs. Right? The crypto market experienced a notable downturn following the US president's announcement on tariffs on imported goods from Canada and Mexico, which took effect on February the 4th. And we know that some of them were put in abeyance because of what the negotiations are going like. But unfortunately, the market sentiment had been affected. There have been massive liquidations in the crypto market, with over $2.25 billion in crypto positions liquidated in the last 24 hours. Predominantly affecting long positions. This event is one of the largest in our crypto space, surpassing previous significant market events like the Terra Luna fiasco or the FTX collapse. Bitcoin has seen significant volatility, dropping below $100,000 due to the tariffs announcement, but also showing some recovery as the situation with tariffs was put on hold. Ethereum has also faced fluctuations, but was noted to be outperforming Bitcoin with a recent 5% increase in one instant, but unfortunately lost those gains as well. And the downturn in the sentiment following the tariffs really had a negative impact in the market. However, there was some positive movement. Like we said, Bitcoin dropped below 100,000, but then it went to 101,000 when the tariffs were held up. So despite this volatility, digital assets investment products saw inflows of about $527 million last week. Bitcoin has been leading these investments, suggesting some investors are still betting on the recovery and seeing dips as buying opportunities. In summary, this week's crypto market has been shaped by macroeconomic and geopolitical events, leading to high volatility, significant and a general bearish trend. However, the market's response to news like the temporary hold on tariffs shows there is still potential for quick rebounds, reflecting the crypto market's characteristic sensitivity to external news and policy changes. Remember, this analysis is based on the recent information that I've managed to collect. So based on these events, what types of trades were affected? Because I kept on giving the warnings on a number of things that I recommended that we should take action. One of those I've repeated on many occasions, that this is not the market to take leverage trades. And really the biggest impact here was the leverage future trading saw many liquidations occurring. For instance, $2 billion in liquidations were reported, with a significant portion being long positions betting on price increases. And the tokens that were affected, BTC, a considerable amount of liquidations were related to Bitcoin futures. Given its market dominance, the volatility caused by the recent tariff announcements had an impact on BTC. BTC saw liquidations amounting to hundreds of millions of dollars, particularly in long positions. Ethereum suffered a significant price drop of 27%, leading the liquidations of long positions worth over $600 billion in one day. Short positions on ETH also saw liquidations through, although to a lesser extent. And the message here that I just want to reiterate, that the market is not the market of leverage trading. Yes, we can do spot trading, but still the fundamentals have been given in terms of the market and in terms of where the market position is at and the developments that are taking place. And I've been recommending that you take whatever I provide and you can build on it so that you can have a total picture, and then you can utilize your trading strategy for you to take a position, have been very important to where we are. I gave advice on the macroeconomic side. I gave an overview of the central banks, the positions that were taken by the ones that were taken, but mostly at the time it was BOJ, the Bank of Japan, that had taken the position of upping the interest rates by 25 basis points, of which we had expected that will take place because they had started that cycle in late 2024. And therefore, already the market had priced this in, so there wasn't an expectation of a market shock. And then all the other central banks were due to meet. And I said, in following the week, these are the dates and we need to go and look at them. And then we had a number of shows that were also talking about the tariffs, what the impact of these tariffs are likely to be. The tariffs that we had before, even going all the way to Howley in the 1930s, which affected the Great Depression, what was the impact of the tariffs in accelerating the Great Depression at that point in time? And then all the way to 2018 to look at the tariffs that were done between the US and Canada and Mexico, because there were tariffs, which led to the change from the NAFTA agreement into the USMCA, which is the new agreement between the United States, Mexico, and Canada. That's what the USMCA means. And we spoke about what the impact was on job losses. And then we spoke about what is it that the US administration is trying to address, which is the economic challenges around the deficit that the US economy has, and why the deficit, over expenditure, and what are the areas that you can use to deal with the deficit. So we had the summary of what are the challenges that the current administration is trying to address and how is it addressing those, but then what are the likely challenges that those would have. The inflationary impact of tariffs, the impact on repricing on risks on bonds and yields, as well as the impact on commodities, the stocks as well, the repricing, reforecast, trade announcements, and all the things that the tariffs would have had as an impact into the market. In the last show we did the Sunday before our past Monday, I advised the traditional traders to go out and make sure that they look at their positions before the opening of their markets. I reminded the crypto traders that our market is 24/7, and therefore there is no opening or closing of the market. The market shock, however, is going to register when the general financial markets have an impact by opening of trade. This is what has happened. In a number of shows before, I had given the advice that the current trading environment, for those who are trading already, it's advisable to trade spots, not to trade leverage. And why? It's because we spoke about the open interest, we spoke about the trading volume and the market sentiment, the greed and fear index. And you could see that the market, when we look at the fundamentals, we were not yet at a very confident market environment where a lot of traders have got a proper projection of what is to take place in the next 3 months, backed by a very stable global market, underpinned by very stable macroeconomic policies from the various central banks. And because there was this uncertainty, on the other side from the crypto market, there was a bullish anticipation that come January 20th, the inauguration of the new US President Trump, a new dawn will begin of a crypto-friendly administration, unlike the previous administration. And these came to being because the appointments of the commission, the committee that is looking at crypto within the SEC, appointment of key people in the SEC, advisors that are advising President Trump, and the people that we know, respected figures in the crypto industry and the investment world, that are part and parcel now of assisting the administration to locate itself within where the crypto market will be able to be embraced by the administration. I also last week did a quick episode just to inform the community that there is going to be a meeting that's going to take place between the presidential advisor who's heading up the cryptocurrencies as well as AI and David Sachs, with a number of chairmen of various committees, both from the Senate and the House. And the announcement was made post, and I explained exactly where the meeting will take place in DC, the time it will take place, 2 o'clock Eastern time, which building it would be. And those in our community that are in United States and have got accreditation could go and attend. Luckily, they had a press conference after. And in that press conference, again, David reiterated what President Trump had promised, the intention to study the possibility of the U.S. government having a strategic reserves on Bitcoin or on the cryptocurrency. So there are these bullish decisions that are being implemented by the new administration. But I had said, though, when you start to change the regulatory framework, it takes some time before those regulatory changes come into, and it even takes some time after those have been announced to see the impact that they have over time. And I've also reiterated on many times that trading is not gambling. So what I'm trying to bring with all of this context of the previous episodes is patience. Study the market. You can take what I present as a recommendation, not advice, but do your further research on top of it. But at least you've got a couple of things that you can jot on your to-do list, or a couple of positions that you can put in your watch list, and then you can check this token or that token at that point in time. But it's important not to get into trading looking for a get-rich-quick scheme. I'm not at all saying it doesn't happen. It's few against the number of traders that take years for them to build themselves up. But if you want to get to success quicker, you have to do more and more homework. More research is required for you to have trades on average that tend to be profitable as compared to the trades that lose you money. But trading, it is profit and loss. So you will have some trades that are making profit, you have some trades that are making losses. We spoke about risk mitigation. Some trades that you take, they are profitable, or they become profitable, or they turn into profit. But if you overstay the trade, it changes into loss. Those traders that have been liquidated now, some I've heard stories of traders who are saying they've lost everything and they are considering leaving crypto trading. It's because they didn't risk mitigate as much as they could. One individual confessed that they didn't put any stop losses. And we spoke about profit taking and stop losses. Because while you are making money, know where you take profit. Stop loss, because when you turn from making profit and the trade goes the opposite direction, there must be a point at which the stop loss kick in. So it's important to put these fundamentals in your trading. It avoids you being liquidated out of the market. But also it's important to understand what type of a market are you trading. Is it a spot trade friendly market? a leverage trade friendly market. Remember, in a bull run, traders make up exorbitant amounts of money and they make unbelievable gains. But unfortunately, that very same trading approach sometimes doesn't work very well in a bearish market. Remember, in a bearish market, you can trade a bearish market. It doesn't mean a bearish market people are losing money. You can trade as much as you are longing and shorting. So you can short in a bear market and make money still shorting. But still, again, you need to know your stop losses. You need to know your profit taking. And you will never get to a point of knowing exactly where the market turns from profit to loss and knowing exactly. You will only realize once the candle has moved. So which means you have to have a detailed trading strategy that helps you. And then you are iterative with your trading strategy using your tools, the fundamental tools and the technical tools. So this week is a bad week to some traders that have been trading in crypto and I think in other asset classes as well. But it's a lesson to traders who are also trading as well and have taken a cautionary approach and have made sure that they've had the proper risk mitigation on their trades. So it is a lesson for you that you can make money, but trade with caution. And also just make sure you don't rush yourself and you learn in the process. So this is an opportunity for us to learn. However, it's also an opportunity if you do your deep dives and your analysis of the market position, various tokens, narratives, you can decide which entrances you need to do now. The famous micro strategy. We know that at this market, this is where they are scooping up more Bitcoin, where they are buying more Bitcoins. And I know a couple of fund managers and institutions that are now buying Bitcoin, and Bitcoin is resurging above 100,000. So there is an opportunity, but you need to know which narrative to look into. Ethereum has been performing very badly in this bullish market that we've just experienced over the past year, and Solana has done very well. Sui has been coming through. So there are a number of tokens that you can look at. But you could say that is at a cheaper point to buy, provided that we know that it's going to recover. So spend time to understand whether it is going to recover. Because remember, Ethereum is the second dominant token in the crypto market. Its dominance is about 10% of the total market cap of the crypto. It's both regarded as a storer of value on others, and it's regarded as a second class to Bitcoin. And therefore, for those that Bitcoin is expensive, Ethereum seems to be the option. I'm talking about now the traditional fund managers and institutions that are coming into the market. So expect volumes that are going to come into Ethereum. Ethereum has got a huge base of utilities, apps, and developers. Only problem with Ethereum that I've said before, the gas fees, transaction fees, still expensive. Hopefully that Vitalik and his team would find solutions around the transaction fees that are expensive. But if Ethereum were to rebound, it would be a good trade to take. I saw predictions of Ethereum going to 5,000 US dollars in price, sitting now at about 2,700. However, there is always in the market predictions that are made about tokens that are being shielded that they are going to the moon. I'm not at all trying to say there is credibility to that 5,000. However, there is potential if there would be a retracement in that trade. So therefore, have a look at it, do your analysis. But more than anything else, I wish you all the best in your trading. We will then see each other in the next episode. Thank you very much. Bye.